Topic number 5. Topic number 5. Accounting and financial statement. Accounting and financial statement. Accounting and financial statements. Financial statements. Accounting and financial statement. Accounting and financial statement. Accounting and financial statement for interest in other entities. For interest in other entities. For interest in other entities. Accounting and financial statement for interest in other entities. Under this, we are looking at two things: the cash flow statement and the group consolidation. Highly examinable. Highly examinable. After we are done with this topic, class, we shall remain with two more. After we are done with this one, zitambaki mbili. So we are almost winding it up, We are almost winding it up. We are almost done. So tufanye revision kabisa. Because we shall be remaining with the published financial statement, whereby we shall be preparing the published or account, right? Published account. We shall see the rules. And then we do topic number 1, the one that has theories, now some small topics like borrowing cost, leases, like that. We shall be done. So let's look at this, and I would like us to start with preparation, just like preparation of statement of cash flow. Preparation of statement of cash flow. That is a subheading. Preparation of statement of cash flow. Preparation of statement of cash flow. Preparation of statement of cash flow. This is guided. We are guided by IAS ngapi? Who can tell us? IAS ngapi? IAS ngapi? Saba. IAS 7. We are guided by International Accounting Standard 7. That is the standard that governs us on how to prepare what? The cash flow statement. Cash flow statement. Cash flow statement. Class, this is an area that is very simple, an area that is highly examinable, an area that is easy to understand. First of all, confirm whether you have written up to where I've written, up to that point. Just confirm whether you have written up to that point. Good. This is very interesting and very good. Very good. Great. Now, what is cash flow? What is cash flow? When we talk about cash flow statement, in a layman's language, a very simple language, somebody amekuuliza, what is cash flow statement? Or what is what is cash flow? What is cash flow? What can you say in a very simple language? Money in, money out. Thank you. That is the simplest language that we can have. And thank you so much, Eric, for using those simple terms. Those simple terms for people to understand. In every organization, in every company, in every business, we have cash flow. We have money coming in when the company sells a product or a service. We have money going out. We have money going out when the company does what? When the company or organization maybe purchase an item from outside. Money circulation, yes. Evil too. And that one is the thing that make all the organization, all businesses to operate effectively. If there is no outflow, there is no inflow. By the way, an ocean, not ocean, but a lake that does not have outflow and it have inflow, we call it a lake that does not have outflow but it has inflow, we call it a salted. Is it a salt water? Salt water lake? Watu wa ni geography ama ilikuwa hiyo ilikuwa nini sasa? Ni geography. Yeah. Is it a salty water lake? The one that does not have outflow, right? It does not have outflow. So the water comes in, no outflow. You find that that is a salty water lake. And we usually advise accountants not to be a salty water lake, not to be like a salty water lake. So once you get money, kindly let that money work. Let that money work outside. Let it work outside so that you are not a salty water lake. Let your money not concentrate somewhere. Let your money not concentrate somewhere. Find something for your money. That one we shall talk in the financial management. So in this case now, we have the in, money out. Money in, money out. Some people fear in business, you find that some people fear to now take money out. Imekuja, but they don't want to take it out because they think pesa inaisha. It's getting short of money. No. Remember, that out is the one that are helping you to get in, right? The one that you take out helping you to get in. Use money to get what? Money. That is the rule. Use money to get money. Use money to get money. Good. Now, at that level, we have two methods of preparation of cash flow. But before I get to that point, I want you to understand this from the word go. From the word go. That we have cash inflow. We always add. It is always added. Cash inflow is always added. Cash outflow is always subtracted. Sasa nataka mtu mzuri aniambie. Just tell me. In this case, what will happen to our cash? Remember, we are looking at the cash. Hapa hatuna maneno ingine. We just looking at cash. What will be the cash balance at the end of the period? At the end of the accounting period? What will happen to our cash if we had an inflow as a company? I want you to view it like that. That is the only way that will help you to get the real picture of this. So what will happen to our cash when there is an inflow? Increase. Thank you so much. Thank you. It will go up. Our cash will be added. That's why we usually add. When we sell something, an item, a service, money comes in, our cash goes up. Good. The vice versa is true. When we purchase, our cash, tumetoa pesa, tukapatiana, tukachukua item. Our cash has done what? Has reduced. Yield your essence. Now, we have three activities. As far as cash flow is concerned, we have three activities that we shall be looking at. We have three activities. The first activity is operating activity. One of us is stuck. Would you kindly share the link? Yeah. That link, now at this point, sharing the link is not possible because because of wait a minute. Oh, I can maybe okay. Let me see. Although sharing the link is not unless the person is new. Let me see whether Marceline Chiron. Okay. She registered this morning. So, okay, sawa. This is a new one. Okay. Sasa, now, you guys. Okay. What do we do? So what do we do? Okay. I just want somebody to copy this. Just copy this. Okay. We've said that if it is a cash inflow, if it is a cash inflow, we add. A cash outflow, we less. A cash inflow, we add. A cash outflow, we less. That means our cash will be increasing here. Our cash will be reducing here. We have three activities in this. We have three activities in this. And the first activities that are involved. My pen today has a lot of ink. Activities. The first activity is operating activities. Operating activities. The second activity, operating activity. These are day-to-day activities, right? Day-to-day activity. Day-to-day. I know you usually record day-to-day transactions in that company where you work. You record day-to-day transactions. So these are day-to-day activities. The day-to-day activities. Day-to-day activities. You purchase stock, you sell, you ask for a debt, or you try to recover a debt. You call your suppliers, you tell them I need 1, 2, 3. They bring for you. Day-to-day activities fall under operating activities. Still, under operating activity, we are going to look at the non-cash items. By the way, you can give me an example of a non-cash item, which will be found here as well. Non-cash item, one example. I hope she has joined. I hope she has joined. Give me one of the non-current item. Non-current item or non-cash item, sorry. Non-cash item. Non-cash inventory. Where Eric. Somebody to help me pinch Eric a little bit. Non-cash. Okay, I'm here too bad. We have non-cash items. It's not cash. You cannot find a check on it. You know, hakuna check ya hiyo. Ati uko na check ya depreciation. Do we have check? Great. Now we are getting there. Amortization, depreciation, interest, gains, all those are non-cash items. So under the operating activity, we shall be looking at day-to-day activities. Day-to-day activities. Then we go to the next part, which is our next activity, which is investing activities. I want you to understand HAPA, investing activities. So under investing activities class, we have these items, yes, impairments of losses and such. We have items under non-current assets. Non-current assets. Hii nayo ni ya day-to-day activities. Day-to-day activities. Here we have non-current assets. You know, you know that investment is done through non-current asset. You can purchase an asset. You can purchase an asset for sale. You can do some investment. You can, through the non-current asset, we do very many investments. Once you invest, you are going to get some dividend. You can get some dividend received. So dividend received in that case, itakuwa inflow ama outflow. Dividend received, let's just brainstorm haraka haraka. It will be an increase. What about if we purchase an item? If we acquire an asset, outflow because our cash has reduced. Always check what is happening to our cash. That is the thing. What is happening to my cash? And then I will show you very simple ways to understand this. Simple ways to be remembering this. When you get a proceed from a sale of asset, what happened to, is it an increase or increase or decrease? It is an increase. Then we have the final activity, which is financing activity. Every organization, it must be financed. It must be financed. By the way, let no one lie to you that they are just operating with equity alone. There's no company. There's no company in Kenya or anywhere that just work with equity alone. You need to have a mix of debt and equity. A mix of debt and equity. A mix of debt and equity. So, under financing activity, these are the items that we shall be focusing on. These are the items that we shall be focusing on. So at least you know what will be happening under operating activity. You have items kama gani? Simnipatie hizo items under operating activity. Items. Under operating activity, we have items like non-current assets. No, is it non-current asset or current assets? Hapana, witi. Okay, salary ni ya day to day. That is for cash flow, eh? The cash flow, eh? Hiyo ni ya day to day, eh? Hapana. Salary si after a month. After every month. So we have a non-cash item. Non-cash item. Loan ni huku. Loan ni huku. Loan ni ya financing. Financing. This is under equity. And liability. Under equity and liability. And liability in this case, it is non-current liability. Liability in this case is non-current what? Non-current liability. Non-current liability. So these are the activity that we shall be dealing with. Discount received, discount received, discount received, discount received, discount received, discount received. Okay. Cash from sale of goods, cash from sale of goods, cash from sale of goods. Cash from sale of goods. That fall under investing. Senior. Those are proceeds from sale of course, asset. Eh? Okay, if it is for the good, if we talk of inventory, under operating, if you sell inventory, so there will be that either increase or decrease in the inventory, increase or decrease in inventory. So we have two methods. We have two methods of we have two methods. We have two methods of preparing the cash flow methods. We have two methods. The first one is indirect method. Indirect method. And the other one is direct method. Number two is direct method. Direct method. Indirect method and direct investment from income. Okay, direct method and indirect method. Those are the methods that we are going to look at today. So the method that we're going to look at today. So I hope you can now have something. You can now write something after saying all that. Say that cash flow is prepared to show the sources of cash. Cash flow is prepared to show the sources of cash. Cash flow is prepared to show the sources of cash and how cash was spent. And how cash was spent. Cash flow is prepared to show the sources of cash and how cash was spent. We have three activities under cash flow. We have three activities under cash flow. And the first one is operating activity. Activity number one is operating activities. Operating activities. Operating activity. So under operating activity class, you say that these are activity carried out to generate revenue or income. These are activity carried out to generate revenue or income. That is under operating activities. Under operating activities. Then you go to investing activities. Investing activities. It relates to acquisition and sale of asset. Or which is, sasa nataka tuwe pamoja mwana misi. Hizi ni vitu sasa, you're just repeating, yeah? You're just repeating. Operating activity is the first one. We have said that activity carried out to generate revenue or income. Or you can say these are day-to-day activities done. Owiti and Mwanamisi, are you done? Are you done? Are you done? Confirm. So that we move. Nataka to move. Leo nataka tumalizane na hii stuff. Good. Then we have said that we have investing activities. And for investing activity, I said that it relates to acquisition and sale of assets. You acquire and you sell. You acquire and you sell. It relates to acquisition and sale of what? Assets. Acquisition and sale of assets. Then we have the final one, the last one, which is financing activities. Financing activity, you say that it is the particular activity, refers to a particular activity which affect the size. It is a particular activity which affect the size and the composition of the company. It is a particular activity which affect the size, and the composition of a company. The equity, liability. And liability in this case, you said it is the non-current liability. We shall be looking at them. Kama kulikuwa na debenture, long-term loan, that is borrowed and paid. So for the purpose to get net cash flow, class, because by the end of the day, we shall require to get net cash flow from operating activity, net cash flow from investing activity, net cash flow from financing activity. For that purpose, we usually have cash inflow. Cash inflow is added. So hiyo ni KNB tu unaandika mahali. Cash inflow we add. For the purpose of getting net cash flow, for the cash inflow hapa tulisema we add. Cash outflow we less. That's done. Definition of terms. Definition of terms. We want to define several terms here so that we understand even what is a non-cash item. Definition of terms. Number one, cash. What is cash? We are defining cash. We've been talking of cash. You say that it include cash in hand. Comma, cash at bank, cash in hand, cash at bank, and demand deposit. The money that is held in a fixed account. Demand deposit. Then we move to the next one. Cash equivalent. cash equivalent. You say that cash equivalent. These are short-term investment. These are short-term investment, and they are highly liquid. These are short-term investment, and they are highly liquid. They are highly liquid. What does that mean? When we say that these investments are highly liquid, what does that mean? What does that mean? What does that mean in accounting? They can be easily converted into cash. Yes, yes. Can be easily converted into cash. Exactly, exactly, exactly. Good. You can put that. Then we have non-cash item. We define non-cash item. Non-cash item. Non-cash items. Non-cash item. You say that items of income or expenses. These are items of income or expenses. These are items of income or expenses which do not lead to movement of cash. The items of income or expenses, it can be an income, it can be an expense, but do not lead to movement of cash. Yaani hakuna kitu kama cash tunaona pale. Ati umeambiwa kuna depreciation. Remember, depreciation is just a provision. It's just provided by accountants. We had a depreciation to this motor vehicle at a rate of 20%. That 20%, you've just provided, but can you really estimate? Can you really even say, hii depreciation ni nini? What is it? Non-cash item. It is there, but not facilitating or leading to cash movement. So we have said that these are items of income or expenses which do not lead to what? To movement of cash, e.g. depreciation, estimated loss of value of item, amortization, impairment, gain on disposal, loss on disposal, interest. Hizo zote, they are non-cash item. I'll show you where they will fall under operating activities. Operating activity. Then we have cash item. Now, what are the cash item? What are the cash item? But before we move to that, kindly confirm whether we are together. Whether we are together as far as the non-cash item is concerned. Are we together? Good. Good. Let's look at a cash item. Asante. Cash item. Now, cash item are like salaries, investment. Salaries, investment. These are cash. These are income or expenses that involve movement of cash. 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 Great. Methods of preparing cash flow statement. Tuandike hizi. Indirect method and the direct method. Method of preparing cash flow statements. We have two: indirect method and direct method. Indirect method and direct method. So we start with the first one, indirect method. And maybe to explain further, indirect method and the direct method, these methods are almost similar in the format. They're almost the same in the format. The only difference comes in under operating activities. The cash flow from operating activity, that is where we have the difference. That is where we have the difference. So indirect method format. Indirect method format, we shall be having two columns. Always have two columns under cash flow. So we have the first activity, cash flow from operating activities. Cash flow from operating activities. So I'll be having the profit before tax. Profit before tax, naweka pale. And then adjustment of non-cash item. Adjustment of non-cash item. So we are adjusting dial G. That is how you'll be identifying your non-cash item. Depreciation, impairment, amortization. A is for amortization. Dial GI or dial GF. Dial GF. Amortization. Loss on disposal. Loss on disposal. Gain on disposal. Gain on disposal. Interest or finance cost. Like that. But I want you now to guide me here. There's somewhere I want you to guide me. If I deal with the depreciation, remember what we are adjusting, by the way, it is this profit, right? Remember all these items do affect this profit in one way or the other. For the depreciation, how does it affect the profit? The profit. Sasa nataka kukutuma how we prepare the income statement, right? To arrive to this profit before tax. How do depreciation affect my profit? Asante LNN. It reduces. We want to adjust this profit to its normality. What do we do to depreciation? Sasa hapo ukishashika hiyo ndio inakuwa secret. Thank you so much. You guys are bright. I think this is the best group that I have for financial report. We add back. You say, you look at this item, check how it affects the profit in the income statement, and then, since we want to adjust this back to its normality, we do the opposite. So if the depreciation is subtracted, it reduces this one, we are adding it back. Therefore, depreciation hapa tutaongeza. What about impairment? Now tell me, add less like that. Hiyo ndio tunataka hapa. Impairment, of course, impairment of loss. Sasa lazima ujue impairment ni nini. Ni reduction of value of these items which are not tangible, si ndio? So, how does it affect this? Si ita reduce profit pia. Impairment pia unatoa. So, tutaongeza hapa. Yeah. Anything which is loss. What we less there, here we add. Amortization, loss on disposal, gain on disposal. Wow, nani anasema? Yes, in the income statement we less, but tukikuja hapa sasa we want to take this back to its normality. Tafadhali tena nataka ushike hiyo vizuri, right? Now, gain on disposal, am I going to add here or less? It usually increase my profit. It increases, therefore nataka kuitoa ili my profit ikuwe normal. I'll be less. Gain you less. Interest or the finance cost, CO usually less. It reduces. So in this case we add. So ukishashika hiyo, you are good to go. Na wakati maybe kwa mtihani umechanganyikiwa, umesahau ni gani tuna add ama tuna less. Most of them we add back. Unaona? Kitu yenye tumeongea we add, kitu yenye tunatoa ni gain peke yake. Please confirm kama tuko pamoja hadi hapo before we go to the next part. We are still under operating. So we go to the other part, which is working capital. Still under operating activity, first activity. Sasa nataka I want just somebody to tell me what are some of the components of working capital, by the way. Component of working capital. These are something that we are going, these are topic under financial management, by the way. We are going to look at it together. Component. Haya, Peter amenipatia formula. Asante. Current assets, current liability. Asante. Yeah, that is it. Now, working capital yangu, nitakuwa na inventory, nitakuwa na receivable, nitakuwa na kitu ingine inaitwa payables, Na if I have prepayment nitaweka hapa. If I have accruals nitaweka hapa. Unaona? Hata accruals naweza weka hapa. Outstanding, accruals. Accrual. Accruals. Accrual. Receivable, So, I want to give you a formula. When you're dealing with the asset, current asset, thank you, Peter, for that. When you're dealing with the current asset, always use this formula, OC. OC, O minus C. So, usikue na ile hali ya did data increase, did data reduce, sijui increase in inventory, hapana. We don't do that. Here we simplify things. So, for the asset, the current asset, use OC, where O is the opening balance, C is the closing balance. In your book, you can write that. Then for the payable and accrual, use CO. Closing minus opening. And now, get here. If you are using this formula, which I advise you to be using, kindly, please type the answer the way you get it. If you get it as a negative, iandike ikiwa hivyo. Usianze kufikiria sijui hii ilikuwa increase ama the formula give you now direct answer. Right? So usianze kuchange. Ukitumia hii formula, hii technique, hii model, tafadhali write the formula the way you get it. For example, assume I had inventory in 2020 and this is 2019. 2019 I had 10 and this is now 20. What is my opening balance? What is my opening balance in such case? This is inventory. Opening balance ni ngapi in that case? Is it 2020 or 2019? Wewe, gai. Hawa nani wachuna? Nani? Opening balance. 2019 will be the opening. Closing ni 2020. Assume this is our inventory, so it will be 20 minus 10. The answer is 10. So I just have to record 10. Oh, you used amount. Oh, okay. Used amount. Yes, it is 10. So you record that 10. You record the 10 hapa kwa inventory. Of course, it will be a positive. Wachana kukumbuka sijui was it increase or decrease. Bora ni positive, that means there was an increase. Tuliuza nini? Tuliuza stock. Like that. Naweza kuwa hivyo. Hii inaendaga opposite, opposite like that. So under the working capital class, don't ever fail. Hizo ni free marks ziko hapo. Hizo ni free marks utakuwa umepewa hapo. After that, you can now come here and get the cash flow before after working capital. Hapa chini, cash flow after working capital. Cash flow after working capital, unakuja unachapa mahesabu zako kutoka juu yote hadi hapa Cash flow after working capital. Then we move to the next part. Remember, those we are recording them at column 1. We are recording them at column number 1. We are recording them at column number 1. Column number 2 is for the total, the net. Then we go to the less tax paid. Less the tax paid. Then less interest paid. Unapata hapo, hiyo na less. Then you get net cash flow from operating activities. Net cash flow now to column number 2 like that. Column number 2. Then you go to the next one, cash flow from investing. Next activity. From investing activities. Cash flow from investing activity, proceed from Sale of asset. Is it an inflow, outflow? Inflow, outflow? Proceed? Inflow, outflow? Somebody? Proceed from sale of asset hapa? Inflow, outflow. It's a very nice one here. It is an inflow, so we add. Pesa imekuja. Then we go to purchase of asset. Tumenunua. Pesa yetu imefanya nini? Imepungua. Pesa imepungua. Then dividend received. Dividend received. Tume receive some dividends. What happened to our cash? Imeingia mingi. So then we can have net cash flow. Net cash flow for this is investing activities. You put in amniambi hizo tumeweka weka kwa column number 1 or I change this column. Wacha ni change hii column ikue hivi. You just don't change hapo. No. Yes, I can change this one. Net cash flow. I have the 2 like that. Like that. So that I have my column number 2 hapo. Ili nipate my like that. But column number 2 iko hivyo. Kwa hivyo. Then we go to the final, which is cash flow from financing activities. So under financing activity, we can have one increase in ordinary share. Ordinary shares, increase in share premium. Increase here in increase. Loan repayment. By the way, when we repay loan, inflow or outflow, loan repayment. Remember, we are just writing several items. Yeah, loan repayment. Hiyo ni inflow ama ni outflow kwa kampuni? Repayment. It's an outflow. We are paying, so hiyo nayo inapunguza our like that. So sometimes dividend, unaona dividend hapa. Dividend paid. Naweza iweka hapa. Dividend paid. Sometimes we can pay dividend. That's still an outflow. Like that. And then you can have your what? Your net cash flow from financing activities. Have it. Net cash flow from financing activity. Net cash flow from financing activities. Unaiweka huko kolami ya pili mwisho. And it's good to note that this one, unaweza kuta that this one purchase of asset is more than the 2 of these. So you get maybe a net cash flow which is a negative like that. So it will be reducing, right? So si lazima hizi zikuwe ni positive. So tuko na this is A, B na C, the total, that one. So to add ABC, like that. If you want now to get changes in cash and cash equivalent, changes in cash and cash equivalent is you take your bonus yetu inakata. You take your A plus B plus C. That is what will give you the changes in cash and cash equivalent. Changes in cash and cash equivalent. And then from there you add cash and cash equivalent. Cash and cash equivalent. Balance brought down. Now, how do I get this one? You take the short-term investment minus the overdraft. Short-term investment plus cash. Of course, for the balance brought down for the year, for the previous year, minus overdraft. That is how we shall be getting that. Inaweza kuwa an item there. Then you will be having the final figure, which is cash and cash equivalent. Cash and cash equivalent. Balance carried out. And that will be the same with what we have in the it should be the same with what we have in the balance sheet. Please finish up. That is the format. That is the format of our indirect method. Indirect method. Once you're done, just type D for done. Once you're done, type D for done. D for done. Good, 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 good. Now, for the direct method, from where we have cash flow from investing activity up to the cash flow from financing activity, the format is the same. The only difference comes in when we have the operating activity. And I want to put down the operating activities here. How do we go about it when you are asked about the direct method? Direct method. And because I want you guys to get this thing, once we do a question on these, try to see whether you can do it the direct way. The direct way. So for the direct method, we shall have still two columns. So here I have cash flow from operating. Cash flow from operating. Cash flow from operating activities. Cash flow from operating activities. Of course, this will be a direct flow from cash book. This is just direct flow from cash book. You know how to get cash received from debtor. Cash received from debtor. Is it increasing or reducing our cash? Cash received from debtor. Reducing or increasing our cash? See, now inaongeza. We received the cash. So. Then cash paid to suppliers. Cash paid to suppliers. We paid. Cash paid for operating expenses. Cash paid for operating expenses. We also paid, reducing our cash. Then we get the total. Then we less tax paid. Less tax paid. That one will reduce. Then interest paid. Less interest paid. That one still reduce. Once you less that class, you can get your net cash flow from operating activity. Hiyo ni rahisi hivyo. Net cash flow, haina maneno ati working capital. Net cash flow from operating activity. Cash flow from operating activities. You put it that. Tumeelewana? Tumeelewana class hapo. Are we together? Sasa hiyo ni ya indirect. That is for indirect. Indirect. So, Mwaura asante. Now, you see, after this, umepata cash received from debtor zote. Si unajua kutengeneza debt account? Debtors account or receivables account. Unajua kutengeneza hiyo. Na payables account. Hizo ndizo unatengeneza hapo. Hizo ndizo unatengeneza hapo. Receivables account na debtors account. Hiyo ndio inapatia hizi. Unajua kuzitengeneza so this one is here. And you know dealer. Unaona hiyo dealer itakusaidia hapa sana. Between debtors account and receivables account, which one has a debit balance? Debtors and receivables account. Ni gani iko na debit balance? Sababu hapo ndio starting point. Receivable and debtors account. Which one has a debit balance? Tuone wenye wamekuwa wakifuatilia hizi vitu pole. Receivables and debtors. Which one has a debit balance? Dealer. Unaona hiyo ni kitu utaenda mpaka ulizwa kwa Atiburu. Peter. Wewe Peter. Unajiuliza which is an asset and which is a liability, right? Receivables and we have said receivable and debtors. Receivables and payable. Okay. Receivable. We have used the same name, eh? Receivables and payable. I meant receivable and payables. Receivable and payable, yes. Receivable, debit, balance, payable. So when you're coming up with that account, the balancing figure ndio itakupatia the cash received from debtors. When you do the same for the suppliers, remember our ndio creditors, you are going to get the balancing figure, and that will be recorded there. Examiner atakupatia information, then you're done. So that is direct method. Ndio maana huwa tunasema ni direct method. You can see no ni direct too. Direct. And then the others zinafuata. Easy cash flow from investing, cash flow from financing zinafuatanisha. As far as the format of the two are concerned, are we together? The format of the two. I want us to do a question here, but before then I want us to have just a break kidogo ya kumeza mate. Mumeshika hizo format mbili? Are we together as far as the two formats are concerned? Are we together? Annette, great. Let me share a question. Go through it within these 5 minutes. Just isome, go through it. Then tuone vile tutaifanya. And then before we even share the question, there is a note here. A note here. Wakati mwingine, examiner will not give you the profit before tax. Atakuja akupatie profit after tax. So profit before tax hiyo na profit after tax hiyo. So for me to arrive to getting the profit after tax, what has been done? Kwa sababu atakupatia hii. Nini imefanyika hapo? What has been done for us to get profit after tax? We have deducted tax, less tax. Hapa tumetoa tax kutoka kwa hii ili tupate hii. True or false? Yes. So if examiner give you this, there's a note. If examiner give you profit after tax and you want to use the indirect method, in most cases, indirect method is tested. So profit after tax, this is what you're going to record as the first item under operating activity. Do you remember where we wrote the profit before tax? You usually write the profit after tax at that place. Sawa. And then remember to adjust this tax as a non-cash item. Are we going to add it back or less it? Are we going to add it back or less it? I'm going to repeat. Yes, Eric has it. We add it back because we want to take it back to the profit before tax. So Naomi, this is what we are saying. In the case where examiner has given you profit after tax, you are going to use it in place of your profit before tax. Penye uliandika profit before tax. Of course, the faster operating activity. But remember to go and adjust that tax. And we have said that it will be adjusted under non-cash item and we add it back to make sure that we get back to our profit before tax. Sasa tuko pamoja, Everine, are we together? I want to share a question here. Look at it as we have a short break. This is very interesting, very interesting, very interesting and very simple. Okay. This is financial reporting. I share a question with the great student here. Please open that question, look at it, try to think about it, try to see items. Now start looking at items. You can even work on the working capital, because working capital that everyone can get. You can view it, and we shall be back at 6:20. We told that the following information was extracted from the books of Airtel Limited as of 30th September 2021 and 30th September 2022. Hiyo ni mwaka moja. Statement of financial position as at that date. We have 2022, 2021. Assets, non-current, current, and then total asset, equity and liability, equity, non-current liability, current liability, total equity and liability. Then additional information. In this case, examiner did not give you a formatted the income statement, gave you a statement. Profit after tax for the year ended, that is September 2022, was that. Interest expense for the year ended, that is September 2022, charged to the statement of profit or loss was 12. All the taxes and interest for the year ended, that is were paid. Total tax for the year ended, that is September 2022, amounted to 48 million. Proposed dividend for the year ended, that is September 2022, amounted to 24 million. Then we have land and building were acquired during the year ended, that is September 2022, at a cost of 360 million. During the year ended, that is September 2022, some motor vehicle which had a net book value of 60 million were disposed for that. Then motor vehicle are depreciated at 10% on reducing balance. Required. Statement of cash flow in accordance with the requirement of the International Accounting Standard 7, statement of cash flow for the year ended, that is September 2022. Solution. Let's have the solution to this very fast. So class, in this question, did the examiner give us profit before tax or profit after tax? Are we given the PAT or PBT? Are we given the PAT or PBT? And what are we going to do? Great. Examiner gave us PAT. So heading, in limited, Airtel Limited, statement of cash flow, for the year ended 30th of September 2022. You add a line like that to scare the examiner, and then you proceed. Line like that, scare the examiner, and then you proceed. So we said, how many columns? How many columns should we use? How many columns should we use in cash flow? 2, exactly. So my sharings are in 1,000 like that. My sharings are in 1,000 like that. Like that. Now, I start with the first one. Cash flow from operating activities. Hii kama kuna kitu unafaa uchangamkie ni swali kutoka kwa cash flow, my friends. So I have my profit after tax. Ni ngapi? Hii ni a matter of looking at what you have. Ni ngapi? My profit after tax ni ngapi? Hii ni the matter with the eye. 84,000. Adjustment on a cash item. Adjustment for non-cash item. I know I have dial G, dial GI, but something else is being added below here. Who can tell me? Dial GI, lakini kuna kitu ingine nafaa niongeze hapa chini. There is an item that now has come up under the non-current. The tax tax expense. Thank you so much. Tax expense. So unakuwa keen sana. So depreciation, impairment, amortization. So unaziandika hata kama hakutakuwa ni sawa, loss on disposal, unaziandika zote. We have gain on disposal. We have interest or finance cost. Interest or finance cost. Now, can you tell me, can I get my depreciation direct? And where do I expect to get depreciation? From non-current asset. Sawa. So that means my non-current asset, I've not been given my depreciation direct. So I need to just chill and pick any other item that I can access very easily. So can you tell me, can I get do we have impairment, by the way? Nikiangalia kwa hii swali yangu, kuna vitu kama impairment kweli? Kiangalia tu swali. Hatuna vitu kama hiyo, si ndio? Hakuna. Amortization pia sijaona. Ukiangalia tu hakuna mahali, hakuna hiyo. Loss on disposal. Sasa hapo ndio niko. These guys sold an item of motor vehicle. Let's look at whether it was a loss or at a gain. Wameuza, kuna kitu waliuza. Additional information number 6. I hope all of us are there. We are told that during the year ended, that is September 2022, some motor vehicle which had a net book value of 60 million was disposed or were disposed of for 72. Is it a gain? Did they dispose this at a gain or a loss? Great, you guys. So hatuna loss, tuko na gain ya 12k. Am I going to add my 12k or less? Am I going to add my 12k or less? Gain 12,000. We are adding it or less? It's a gain. Again, we said it reduced like that. Finance cost. Kuna finance cost. Kuna mahali wametaja. Walitaja mahali. Na ndio maana kusoma swali kwanza ni muhimu. Kusoma swali kwanza. For me, I know. Kuna mahali walitaja finance cost. Yes, interest. Number 2. Interest expense for the year ended, that is September 2022, charged to the statement of profit or loss was 12. So am I going to add or less? Add or less? Interest? We add. Asante. Tax expense. They also mentioned for me. What is our tax expense? Somebody? Additional information number 3. All taxes and interest for the year ended, that is September, were paid. Total tax for the year ended, that is September, amounted to 48. Can you see that? Even my tax hapa, 48,000. Adding or lessing our tax. Imagine, yani, na hizi ni max. Any correct entry, max. So far, na hakuna kitu nimefanya. Have I done any computation class? Tumefanya? Hakuna kitu tumefanya. So, you first of all learn with what you can. Then hizo zingine utafanya baadaye. So, you know the format, input the figures that you can, hizo zingine baadaye, right? For instance, in my case, depreciation itarudi hapa baadaye. Hapo nitarudi baadaye. I go to the next part. Next part ni gani? Remember, we are using the indirect method. Next part ni gani? Nimemalizana na hii part ya adjustment. Next part ni gani? From the format. Format is the guiding principle. Working capital. Working capital. So for the working capital, I have to put my, I know them. Inventory, receivable. Hiyo ingine niambia, hiyo ingine ni gani? Receivable. Hiyo ingine ni gani? Payable. Hiyo ingine pia ya mwisho. Payable and accruals. Sasa nimeziandika tu hivi zikiwa ni sawa. Kama hakutakuwa na ene, mimi nitaacha blank hapo. But sasa format I know the format. So can you tell me, in my inventory niko na figure gani? What will be recorded for the inventory? Hii kwanza ni mswaki. Hii ni kama ile ulikuwa kunanyesha and then unaenda mahali una slide vizuri. Una slide vizuri. una slide vizuri. As a team, mko team una slide vizuri. So, can you check? Go to where we have inventory. I have 84 and 96. 84 and 96. Now, I want to know the exact amount to record. Is it a negative or a positive? Tulisema kwamba unairekodi vile umepata. Tunatumia OC ama CO. Are we taking the formula of OC or CO plus? OC. If you're dealing with the asset, OC all through. So I just, my opening is year 2022 ama 2021. Haya, watu wananipatia pale. These things are simple, bwana. Kitu bwana. 2021 is our opening. So O, that is 84. And the other one, 96. What is the difference? 84, I expect a negative. People are giving negative 12,000. I hope that is the case. Good. You record it the way it is. We go to the receivable, we do the same. Still OC. Receivable tunapata ngapi? Nataka tumalize hii swali. 36. So 36,000. Twende kwa payable. Payable iko pale chini. Current assets. Payable sasa ni CO. This is OC. OC. Sasa hapa ni CO. CO. Hiyo ni muhimu sana. Payable sasa 14,400 which is a positive. Hiyo ingine ya accruals. Accruals naona iko. Accruals. Ngapi? CO sasa 12,000. Just imagine. Hizi ni marks. 1, 2, 3, 4, 5, 6, 7, 8. Huyu mtu ako karibu kupata hii swali. Marks zote. I'll show you how this is marked. Now we're done with that part. We can get the total cash flow after working capital. Cash flow after working capital. Haya, total ni ngapi? Hapa. Then we get less tax, less interest paid. We are good to go. Total ni ngapi hapo? How about depreciation? Wait. Don't add. Thank you. We move to the next. Asante paid. Asante sana paid. Asante usiongeze, hatuna depreciation, and that's why tumeweka question mark. So we less asante sana. Tax paid. Tax paid ni ngapi? Ni ile tu 48, 48,000, and interest paid ni ile tu. Interest haina adjustment in this case. Usiongeze Peter. Usiongeze. Wacha kwanza tufanye the framework. Alafu sasa tumalize hapa. Usiongeze kwanza. Interest paid 12,000. And this one we are subtracting. Now let's compute depreciation. Depreciation itapatikana kwa my non-current. Tuanze na non-current ya kwanza. Non-current ya kwanza ni item gani? Land and building. Let's go to where we have land and building. Are we there? So that we get depreciation. Lazima depreciation equate the accumulated. So this is credit. This is debit. What is my balance? Nataka tu niambie balance brought down ni gani? Patie balance brought down ya building. Balance brought down ya building. Land and building. That when how I wish that kila mtu analeta. We need the chart injae kabisa. Linet anapatia 240,000 exactly. This is an asset, 240,000. Our shillings are 1,000. This is an asset. Once you write that, you come here and put your balance carry down. Ningapi? Carry down, of course, the other one in the year 2022 equal 540. Then you ask yourself, do I have any other information that is touching on my land and building? Kindly tell me. Of course, you get that in the additional information. Do we have information touching on it? Additional information number 5, talking about acquisition. There was acquisition of this land and building. How much? Acquisition 360,000. So to acquire. Do you have any other information relating to this? Hakuna kitu kama hiyo. Now you balance your account. If I can look at this end, it will be more. Ni ngapi? On my debit side kuna mingi. That's how you do the accounts. 600. So nikiwa na 600,000 hapa, pia hii itakuwa 600 hapa. So the balancing figure hapa itakuwa depreciation. Anything that reduce this item is depreciation. What is the balancing figure? 60,000, right? Now already we have one of our depreciation. We do the same to the other item. We go to the motor vehicle account. Motor vehicle. This is credit. This is debit. Aya, balance brought down. Nipatie sasa haraka. Nipatie sasa asset still. You still dealing with the assets. Balance iko wapi? Motor vehicle yangu iko 144, right? Do you see 144? 144,000. Then balance carry down hapa. Iko ngapi? Where is 120? 120. I hope you're able to see 120,000. Then we were told that these motor vehicles, some of these motor vehicles were disposed. What was the value of disposal? Iliuzwa pesa ngapi? 72. Disposal value ilipunguza. Disposal value inapunguza. Disposal value 72,000. Then we were given the rate at which depreciation is happening at a reducing balance, right? So depreciation, will it be reducing this item value or increasing? Anything that is reducing tunaiweka on the credit. Sawa. Will it be reducing or decreasing? Increasing. Of course, it's reducing the value. And we were taught to use the straight line method. No, reducing balance. And what is our cost? Cost ya hii motor vehicle ni ngapi? Ndio hii 144,000. Right? Cost. Hiyo ndio 144 mwanzo, eh? So what is reducing balance method? We take 144 minus the accumulated depreciation, which we don't have, is 0. Then we get 10% of that. What is 10% of 144,000? That will be our depreciation here. Depreciation hapo. 10% of 144,000 ni ngapi? Tabaki 14,400. For somebody who just does that, it is 14,400. That is our depreciation. So at least niko na depreciation ingine hapa, but still I can balance this account to see whether these guys acquired some motor vehicle. Maybe they acquired some motor vehicle as well. And it will be solving for me big because for acquisition zote zitaenda wapi? Under which activity? Acquisition. Kama kunayo hapa na hapa. Hii already tunajua. Hii tukipata. Zitaenda which activity? Under which activity? Tutakuwa tukipiga two birds with one stone. Acquisition zote zitaenda kwa which activity? Is it we have 3 types of activity: operating, investing, and financing. It will go to financing. Investing. Can you now balance this? Ongeza hii naona ni mingi. 120 nikiongeza hii na niongeza hii ni mingi hii side. Ongeza hiyo side. Total. Nataka tuende kwa furniture. Na furniture nyingi ndio mtanifanyia. Kareba. Nipatie toto ya huku, toto ya kule, toto ya my credit side. 206. Uongo. Kai, is it 206? Ni 206. Ukweli? Fika msema ni ukweli. Good. Sawa. 206. 206,400. 206,400. Ati bilu kateti imepotea. Mmeniambia ati ni 206, eh? Bona ungepotea hivyo. 206,400. 206,400. Aha. Then 206,400. Did this guy acquire motor vehicle? Do you have acquisition? The difference ndio acquisition. Sasa tuone kama wali acquire kitu. What, how much? Somebody is having still kai. Uongo bana. Uongo bana. Uongo bana. Ukweli. Basi we have to check. Disposal lazima hapo tuangalie basi vizuri. Disposal lazima hapo basi tuangalie vizuri. Disposal lazima tuangalie vizuri. Somebody check our disposal value pale. Disposal tuliuza aje? Tuliuza the value was 60 million. 60. And then we disposed these at 72. At 72. Now, are we going to record the 72? Are we going to record the 72? Let's think about our disposal. You can see our disposal here is giving us a challenge. Disposal is giving us challenge. Are we going to record the 72 as far as this is concerned, or 60? The item that we dispose, value ilikuwa gani? The book value. Book value. 60,000. Book value. Hapo sasa, you know, 72 is a what? Is the proceed. 72 is the proceed. So 60,000. Sasa I think itapungua kidogo Our 206 itapungua kidogo hapa. Our 206 sasa itapungua kidogo. Itakuwa ngapi? Sasa ukifuatilia, yes. It's the book value. So always record that book value. So total ni ngapi? 19,400. 194? 194,400. 194,400. Now, acquisition. When you acquire item worth how much? Gain on disposal. Yeah, gain on disposal. Sawa, Maura? We had it here. Gain on disposal. Sawa. So, what is our acquisition? They acquired item worth 5,400. So we shall take this and this. Use it for investing activity. Acquisition. Now we were not interested with that. We were interested with this and this in this case. Then we move to the other one. Which is the furniture and fitting. Nimefuta hiyo depreciation, but for you have it. Furniture and fitting. Fitting. Credit, debit. The balance ni ngapi? Balance brought down ni ngapi ya furniture? Balance brought down ya furniture. Furniture iko tu hapo. Na sikuona additional information ya furniture. 168, 168,000. Balance carry down. Tuko na ngapi? 96,000. Do we have anything to do with the purchase or acquisition of this? Hatujapewa any additional information of this. So the balancing figure here will definitely be what? Our depreciation. So depreciation for that in ngapi? Kwani kuna 168,000. 168,000. Itakuwa ngapi? 72,000. Now, can we accumulate all the depreciation? Tuko na hii ya 14, tuko na hiyo ya Radel building, na tuko na hii ya 72. All the depreciation ni ngapi? Tulete hapa. That's how you do. Accumulate all of them. Zote. Tuweke hapa. So that at least we are able now to get our final hapa. Accumulate zote. 146,400. So depreciation is 146,400. Now you can add to get the cash flow after working capital. Ongeza kutoka hapa hizo zote ukitoa. Like that. Niambie unapata toto ya ngapi? Hapo? Niambie tufastishe kidogo, nataka tumalizane na hii. If possible nataka tumalizane tafadhali. Tufastishe tu kupata hiyo toto hizo zote. We'll be able to see them. We want us to finish up. Toto ni ngapi? Toto somebody hapa toto hapa. Chapa ukitoa. Total ni ngapi? Okay. Umechapa chapa kabisa hadi hapa 172,800. Umeendelea hadi huku. Umeendelea hadi huku Faith. Okay. So our net cash flow from hii pen haitaki kuandika. From operating activity, net cash flow from operating activities. People are giving me 172,800. 172,800 like that. 172,800 like that. Then we move to the final investing activity, and investing sasa haina stress. Investing haina stress. Tuko na profit na tuko na vitu mbili ya invest. Cash flow from investing activity. From investing activity. Cash flow from investing activity, we have a purchase of asset. Tuongeze zote mbili. Have a question. Let's assume the depreciation for furniture equal on debit side. Will we less to get depreciation always reduce the what? Will always reduce the value of that asset. It will always reduce the value. If it is on the debit side, that is acquisition. Sawa. Acquisition. Yeah. Debit side, acquisition. Ama revaluation gain. Revaluation gain still, we can have it. So asset hapa tulibuy 360,000 plus 5,400. Total ni ngapi? Total of the acquired 360,000. Total ni ngapi? 360,000 plus 54. For 10,400. For 10,400. And this one is an outflow. Then we had a proceed from disposal. How much? Proceed from disposal. Sasa hapa ndio tunaweka hiyo 72 yetu. 72,000. And for that area, hatukuwa na any other item. We can get net cash flow from investing. Net cash flow from investing. Ni ngapi? Activities. Itakuwa how much? Net cash flow from investing activity. Of course, you just take your negative 410,400 plus. So itakuwa kaka negative fulani. Najua, lazima negative, Negative 410 like that. 400 plus 72, ita reduce, Itakuwa how much? Give me the total. Give me the total. Nataka twende kwa next. 338,400. Is it a negative? Yes, of course, negative hapa ni mingi. So we can have a negative 338,400. So this is our A, this is our B. We get our C from cash flow from financing. Cash flow from financing activities. Financing activities. Cash flow from financing activities. Under financing activity, equity section, let's go to where we have equity section. We check whether tuko na vitu kama hizo. Niko na ordinary share. Now this is, I can advise you to be using CO. Kama ni iko direct na haina additional information, use CO. Sawa. Like for example, our ordinary share ni CO. 480 minus 360. Ni ngapi? Increase in ordinary share. In ordinary share. CO ni sawa. Ni ngapi? Increase in share premium. Ordinary share mnapata ngapi? It is just CO 480,000 minus 360,000. Napata ngapi? Hiyo ni direct. 120,000. Pia hii ingine the same. 120,000. Pia hii ingine share premium. These are sisters. Itakuwa the same. 180 minus 60, still 120. 120,000. And that is an increase. Then you check any other item. Retained earning will always help you to get the dividend paid. Retained earning will always help you to get the dividend paid. But in this case, wametupatia proposed dividend. So haina shida, tutatumia hiyo proposed yenye wametupatia. So can we check whether the dividend was paid or it was received? So if I can see the proposed dividend, we can open an account. Can have an account here. Proposed dividend account. Now, I can use what I have. The balance brought down in gani? Balance brought down. And will it be on the debit or credit side? Balance brought down. Ni ngapi? 12. Can you see? Our proposed dividend mariko? Ama tutumia retain earning, whichever inaweza tupatia. It is 12,000. So this is a liability. Balance brought down 12,000. Let's check by use of this. Balance carried down. Liability. This is 9600. Now, can you tell me what will be go to the bank account? Because this will be 12. Hatuna ma adjustment. Hapa chini kulikuwa na kitu about proposed dividend. Proposed dividend for the year ended, that is 2022, amounted to 24. Number 4. Yes, you can see we have proposed dividend. Hapa dividend for the year ended 24,000. So tuko na 24 hapa. 24. So what do you think will happen here? We have the balance or the income statement. Income statement, we have been given 24,000. So that will not be 12. It will be, we have that additional information. So total ya hii itakuwa 36,000 minus 9,600. Siri tupate what go to the bank account. That is the exact dividend paid. Dividend paid. Itakuwa ngapi? That is 36,000 hapa pia. So 26,400. 26,400 it's the whatever that was that went to the bank. So that is the amount that we need. So dividend paid, it is 26,400. Dividend paid is 26,400. Thank you. Then we move to the next item. Nataka tumalize. The last item ni hii loan. Long-term loan. You just do the same. For the loan. You do the same class. You do the same. CO. Hiyo ni kama loan paid. 120 minus 180. Loan paid. CO. 120 minus 180 itakuwa ngapi? 60, which is negative. Or even this one is paid 60,000, like that. We don't have any other item remaining, sorry. Yes, it is negative. Yes, negative. Annual, it's negative. Now, we don't have any other thing. We can get our net cash flow from financing activity. Let's get net cash flow. Net cash flow from financing activities. Give me the total. For the bank is 60. Bank hapa. Loan paid, dividend paid 26,400. This one. 36 minus 9,600. 26,400. That's okay. It's okay. That's okay. 153,600. 153,600. So the total hapa ni 153,600, and that is our C. Now to get the net changes in cash and cash equivalent, you add the 3. Net changes in cash and cash equivalent. Changes in cash and cash equivalent. Total ni ngapi? Net changes in cash and cash equivalent class ni ngapi? Uchukue A plus B, of course, minus B plus that. Pata ngapi? Net changes in cash and cash equivalent. Haya, nipatie total pale. Net changes in cash and cash equivalent. Net changes in cash and cash equivalent. Tupate hiyo tukisonga. 12,000, which is negative. 12,000. What do we add? Somebody who can remind us, what do we add? Cash and cash equivalent balance brought down, eh? You add cash and cash equivalent balance brought down. Add cash and cash equivalent balance brought down. Now in our case here, nikiangalia tu vizuri in our case, did we have anything to do with the overdraft? So tunaenda tu pale kwa cash and bank. Can you see cash and bank? Cash and bank under our current asset. Hiyo hatujaguza. That's the only item ya kumalizia hii swali. Hiyo item ya cash. Na tungekuwa na short term investment still, we usually bring it together. Sawa sawa. In short term investment plus this one. Tunaileta pamoja, alafu tunatoa bank overdraft kama iko. Lakini kama hakuna, like in our case here we don't have, we use what we have. So, in my balance brought down or in my start year, what do I have as a cash? That will be my cash and cash equivalent. No. Remember hiyo 28, sio hiyo ni toto ya hizo. Ni vile tu imepangwa like that, eh? Angalia tu ya cash and cash in my 2021, that is brought down figures. It is 36. So I just bring it here, 36,000. 36,000. And then I do what? I add to get cash and cash equivalent, cash and cash equivalent balance carried out. So can you give me the cash and cash equivalents? Hapo? People are getting 24 what? 24,000. And then you confirm whether this is the balance in the year 2022 as they were closing the book. Is it the same? Is it the same? That is how you confirm your cash. In the balance, yeah, that was the balance that they had at the close of 2024. That is how you do this. That is how you do this. That is how you do this. Now, in your big group discussion, I'm going to share two questions. And if time allows, we shall do one on Thursday. Because I want this week, we start on group consolidation. For the cash flow, hii haina maneno mingi. So I'll share two questions. You do them in your group and then share your work. So that marks the end of that. I'll be sharing the question for assignment shortly. So you do them and share your work. So try to discuss, try to ask questions with your friends. Try to consult. Try to consult. Oh, Annette is asking at which year? That one is borrowed. So hiyo hata si lazima ujue mwaka gani. Pata concept ukisonga. Annette, sawa. Pata concept ukisonga. So we can wide it at that point. We can end our class at that point. Thank you so much for having attended our today's morning session. Have a blessed day. Let's meet tomorrow for financial management. Always your lecturer, the IG. Good day.